Hey guys, what's up? This is Andrew for TRENDLINES.com. So I'm here to make a big update, guys, on AMC, on GameStop. A lot of things happened this week, some good things, some bad things. So let's go through everything and let's try to see how this might impact the price action. Let's get into it. Let's start with AMC, guys. So in my last update, I was telling you that we had this breakout on the downside below the triangle double band that was here, guys. So this is not a good signal for the medium term. So I mean, this is kind of expected that we won't have this big reversal right now. We probably would have some better things happening later. I'm going to tell you how long I think this would take and how low we might be going before it happens. But first, let's quickly have a look at what happened during the week. We closed last week around 25. Then what I was telling you guys is that we want to see the price action closing above the 200-day moving average, all right? This one. Because, you know, this is an indicator that is followed by a lot of investors. And whenever we are going below that, you know, they just get out of the trade. And if we come above, they might get back in. So it's an important indicator. And here, when you zoom in on the first time frame, we were having some good things happening, all right? So 31 was the resistance for the past 10 candles, all right? So around 4 days. And suddenly we had this huge candle above that level. You know, this is a breakout. We had a bullish divergence just before between here, the price action was making lower lows and the RSI and MACD were making higher lows. So usually when we have this kind of signal, the market likes to reverse. But here, actually, guys, we got fucked. I'm sorry for my language, but this is what happens. When you look at, you know, just the news, so I'm sure you guys saw that already, but let's quickly go through the articles that I have on Bloomberg. Bam, bam, bam. The first one. So basically, Adam Aron sold some shares, all right? He started to sell some shares at 30.7. This is what I saw. Give me a sec. Bam, bam, bam. Okay, so 300 shares that he sold at 30.8 on December 7th, all right? So he sold here, okay, so right on the resistance. I guess Adam Aron is using technical analysis as well. And then we still had, even after that news, so I'm not sure if the market was aware or not exactly when he's done that, but we still had this very positive reaction from buyers. And then he kept selling shares. His associates as well sold some shares, okay? So Sean Goodman sold 18,000 shares. So it's not that big, you know, but it's just a bad signal. Those guys, they are basically supposed to do everything they can for AMC price to go higher. And, you know, selling shares is really not a good signal. I mean, if you are the commander on a boat or whatever, you are not getting out, all right? You don't let people down behind. And this is what they did. So this is really something that I was not expecting personally, and that here created this fake out. Apes were buying, things were doing better. And once again, I was personally thinking that we would go higher and maybe test the 35-40 area within next week. But, you know, when this kind of event happens, what can investors do? You know, a part of selling, this is natural, all right? When the big guys start to get out, you know, this is the phenomenon that we can expect. So whatever the reason, this is what happened. And right now, it's not looking great. We faked out here above 31 because once again, we had this bullish divergence, this breakout here above 31. We can also here, we could also make here a trend line a bit like this. So, I mean, it was looking great and still we didn't manage to confirm that. So whenever you have a fake out, usually after that, you make new lows. This is how things usually happen. So let's just be prepared for what might happen. So let me get rid of that. This one, I can keep it. We got rejected. We closed above the 200-day moving average, but we didn't confirm. We faked out. And right now, guys, we are, to me, going to make a new low, which would make sense after, once again, this fake out. And the levels of support to me at 24. Why 24? Because you can have a look at what happened in May, and here we have one reaction. So this is not a very strong consolidation. If you zoom in a little bit more, you can see that this low happened very quickly. The consolidation was maybe more around 25, but still 24 is the bottom of the fourth wave of the preceding move up. So the bottom of the fourth wave is a support level. So this is the reason why I believe 24 is a support that might hold. So let's see what happens here. I would personally not buy more at 24. I think that we might go to 21 as well. The reason behind that is, so once again, here, whenever this kind of moves happen, it takes time to repair. So if it takes time, let's go on a weekly time frame, guys. Okay, and let's try to see the big picture. Where are the strong supports? And 24 is a support because, just like I said, it's the bottom of the fourth wave of the preceding move up, but it's not a strong support. 21 is a strong support, and you can see in the past, even if I go back to 2014, here it was a support, here a support. In 2018 it was a resistance, then in February 21 it was a resistance as well. So right now it is a support. So we might here see a bullish reaction if we go there, you know, quickly. So what I mean is that, for example, at 24 I would be waiting to see some bullish signals just like we had here, but this one, you know, didn't work. But if we have some more bullish divergences, so for example, if we make a new low, but we can see the momentum is still going better. How is the momentum right now? The daily momentum is going lower, but on the, the MACD, the RSI is making for now higher lows. So let's see if we still make higher lows if we go lower. If yes, it would be good. If 24 holds, we're gonna have probably some time before taking action. You know, we might see something like this, okay? So I wouldn't go right away here by this dip because, guys, it can go lower. But if we go to 21 right away, so it's a sharp move down, I know, but unfortunately it can happen. All right, we're talking about 20%, so not in one day, but maybe in 3 days, you know. This is kind of the worst case scenario for this coming week. And if this happens, here buying the dip makes more sense. We would probably then come back towards this downward sloping trend line where, you know, we might see some selling pressure, but eventually we would probably manage to get above that and to start to develop doing higher highs and higher lows. For now, this is not the case. So this is what I wanted to show you guys on AMC. So once again, let me just quickly repeat what I think might happen. We would probably go to 24 and might maybe go to 21. Once again, here, let me show you the new counting that I have, guys, because it's not easy to apply Elliott wave theory to AMC, let's be honest, but I'm still trying to do it. I still have some good information coming from that theory. And here, the best counting I have for now is a WXY correction, all right? So WXY correction, it means you have some ABCs inside, so I can draw it quickly. ABC, ABC, and ABC, okay? And C waves, they develop in 5 waves. A waves as well, but C waves are usually deeper and more impulsive. So here, in this kind of situation, whenever you're not sure about the counting that is the best one, what I usually do is that I like to start from third waves, because third waves are very impulsive and they usually go through major levels. So this is a third wave because we went through this triangle lower band around 38. So this is the third wave, and here 1, 2 makes sense. So we just completed the fourth and we have a fifth wave coming. So whenever you have 1, 2, 3, 4, you guys know that we can use Fib to projections to have some idea about where the fifth wave might go. And the 0.618 is, you know, the most common ratio. It can be 1.618 as well, but on the downside, it doesn't make sense because, as you can see, the 1.618 is at 0. So this is not working, but the 0.618 is at 21. So I have a double kind of support at 21 coming from natural support that is the recent highs, and in the past it was a support, and it's the 0.618 percentage projection, fib projection ratio compared to 1+3 that we're doing right now. So 21 is unfortunately, you know, the target that I would give you guys for this week. It's not a good target, I know, but after that things might go much better. If we go there, then once again the signal that things start to go better is whenever we close above this trend line. So we need to see what will happen before that. Of course, if the move down is very sharp and we come back too quickly, it might fake out again. But if we have some nice consolidation here just before and then we have this move up, you know, this would look much better. So this is what we would like to see, ideally around 24. But if we don't have it around 24, we'd like to see around 21. And whenever we have this breakout after this consolidation, things would look much better. We'd probably come back quickly to this area around 35. That is coming from the downward sloping trend line that I get connecting the highs of my triangle that is still valid on the upside. And this is the signal that we would be waiting for, guys. So the real question is, so we've just seen how low we can go. I hear some people that say we can go down to 16 because I guess it would fill the gap that is here. I mean, I don't think we might go that low because we've seen what happened this week, guys, all right? We've seen that when we came to 25, Apes bought, all right? Who was selling? It's Adam Aron and his friends, all right? So this is a fuckery. These things usually don't happen, but it happened here. What I mean is that, you know, we still have buyers and we can see them, we can see they are active. So, I mean, what can we say from the fact that those guys sold? Because it's interesting to, you know, just think about, all right, they have information about the company and they are selling. So it means that AMC is probably overvalued. All right, breaking news, we didn't know that. Come on, we have known that for a long time. And despite the fact that it's overvalued, I mean, people don't buy AMC because they think the cinema industry will really generate a lot of profits in the coming month or even the coming year. They buy it because it's a fight against hedge funds. It's a fight against all the regulations that are not done properly in the financial industry. And this fight, for me, will keep happening as long as those problems are not solved and as long as there is money in the economy. And the money, I mean the injection of money by, you know, the Federal Reserve and other governments. So as long as this money is here, the same phenomenon might happen. This is to me the sign of a bubble. What is happening in the meme movement is just to me a big bubble. And it's not ready to burst at all. I mean, we didn't see the highs of the bubble yet. This is my conviction. This is what I believe. And I think that AMC and GameStop are really the two stocks that will attract the flows of money because, you know, everybody's talking about that. So I think that the same things might happen again. And just that right now we need some time. We need some time for all this damage to be repaired. And we need some, you know, good news as well, some catalyzers, maybe about the COVID that would, you know, be handled better than it is right now. So let's see what happens. Let me have a look, guys, quickly at the synthetic short. So as you guys know, this is a good indicator of the bullishness of the market. Whenever you have a lot of options that are bought on the highest strikes, this means that, you know, people really believe in the fact that AMC can go to crazy levels. And you guys know that we're having this, you know, 145 strike on the Gen 22 maturity. All right, this one. So it's absolutely massive. We have right now around 4 million shares total on this strike, in which 14 million are coming from 140,000 times 100 are coming from Gen 22 maturity. So the question I'm having is, how is it going to get rolled? All right, because I don't think this scenario would happen before Gen 22 because of, like I just told you guys, this, you know, takes time for the damage to be fixed. And in the best case scenario, all right, we go there. You see, it's already in March. I mean, yeah, we can have a squeeze coming from nowhere, but let's be, you know, a bit realistic. It won't happen that way. it would take some time and for bulls to gather their strengths. So maybe it's gonna happen in March 22 or even maybe later. But what I'm interested in is to see how many of those options are gonna get rolled, because they create gamma, they create shadows for market makers, and they are for me the sign that things, that the movement is not over. So as long as I will see those crazy options on those very high strikes, which is the case right now, I will still be bullish and my targets are unchanged. I still believe we can go to the 130 level on AMC. So right now the DTC is at 3, guys. The total short is 23%. The regular short is 18%. So this was October data. Oh, guys, I need to update that. 15. Okay, so slightly less shorts for the 15th of November data, which is the freshest one, but it doesn't change much. There is still a lot of short in this market. You guys know that. And as long as there is short, as long as there is money, as long as the Apes movement is strong, we can see those very crazy moves up and squeeze happening. So now let me go on GameStop, guys. Bam. All right, so on GameStop the situation is a bit different because we are just at the beginning of the breakout below the triangle lower band. All right, so we are below the 200-day moving average, which is not good. We are below the triangle lower band, which is not good. We had bad results. Let me show you guys that. So as you guys can see, on the 8th of December, we were expecting minus 0.5 earnings per share, and it was minus 1.39. So 168% negative surprise. So that's not good, and this drove the price action lower. All right, bam. So let's analyze technically what happened here. This was a bit the usual breakout retest, we go lower. So as you guys can see, we closed the day here. On that day, on the 3rd of December, we closed below this triangle lower band. Then we retested it and then we went lower. So what can we expect? Guys, let's be honest, not good things. Usually when these triangles are broken, you can expect a correction that is lasting at least 1/3 of the period of the triangle. So here the triangle roughly lasts 6 months, so we can expect 2 months, guys. 2 months of ups and downs, but mostly going lower. So something like this, okay? This is, I think, what will happen. So I'm not sure we're gonna go to 118 or 135, but we're gonna need to find some fresh buyers at those lower levels. This is what I've been telling you guys in my previous video. This is still holding, unfortunately, for now. I mean, you know, we have those strong moves down with volume. It's not good technically. Now, like I said, guys, I believe that things will come back to what they were, which is, you know, a lot of big money players getting in this trade because they feel they can make money. And, you know, I think that this will keep once again happening as long as we're in the same environment, which is this free money environment. And for now, it's gonna keep being like that as long as we have some issues with, you know, even the COVID. You know, the economy is not ready to really run by itself at the moment. So this money will still need to be here. And as long as this money is here, once again, I believe that the meme stocks will keep attracting flows, even if right now they're all getting dumped. That's true. And we have some major breakouts on some major meme stocks like AMC and GameStop, but it will once again take some time and then things, I believe, will get back to what they were. Let's analyze, guys, what we have on GameStop in terms of options. Okay, just a sec. Then I'm trying to retrieve the 950 strike. Okay, now I think I have it. All right, I have it. Woohoo! Okay, so this is still growing 4.5 million shares on the 950 strike. So let's analyze how much of this 4 million shares are coming from Jan 22 or Jan 23. So right now, it's mostly coming from Jan 22. You can see 3.8 million shares here and only 7 million shares, 740,000 shares on Jan 23. So let's see once again what happens whenever this maturity comes closer and if it's getting rolled. Guys, it means that it will take some time, but it will happen. This is my conviction, and I'm gonna keep analyzing the option market, the technicals, everything that is happening on those stocks, and try to see whenever we finally have this squeeze. So that's it for today. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. I see you guys.